Good morning, everyone. This is the trade which we took yesterday, which I'm still holding my own position. So, as I promised us that I will explain to us the confluence that I got before I made this entry. Okay, though who have secured our profit, our take profit was at 1737, which was hit as at yesterday. Okay, at this very point, somewhere here. So, without wasting much of our time, you guys know that this was the signal which I dropped. I dropped the signal as at yesterday. This was where we started, and the market really went to our favor a long way, and finally we hit our take profit. Okay, so this was our take profit. Okay, so this is just a clip of when our take profit was hit. Check it out. Check So guys, that was just a clip of when our take profit was hit as at yesterday. Okay, so we'll make a massive money on it. So I have to close some position. I still held back some position. So these were some of the results of our members. Okay, these were some of the results. Okay, these ones small accounts being doubled. Okay, so these are some other results. So back to the chart, guys. Let me explain to us what actually happened and how I got the entry for that very sniper. So if you zoom your chart 3x, if you zoom your chart 3x using your trend line, okay. So this strategy I call it TPX. Okay. When I talk about TPS, I talk about trend line, psychological level, and finally indicator, TPI, TPI strategy. Okay. So let me explain to us how it works. So with your trend line, when you draw out your trend line, you discover that at this point the market made the first move, push up, second move, push up. Then here was the third move. So at this third move, what are you going to do? When you see that the market has approached this level, you pull out your second strategy. Remember, we are using TPI. So the first one here is your trend line, which we have drawn. First touch, second touch, at the third touch. So we are done with our T, which is our trend line. So we'll go over to P. And P is what? P stands for psychological. Okay. So how do we get our psychological level? We pull out our horizontal line. At the very point that price touched the trend line, you pull out your horizontal line. Check out for your nearest 10. The nearest 10 at 11 should be 0. Okay. So we click. If you don't know how to get your psychological level, I think I have the video previously, a detailed explanation on how to get your psychological level. It's very simple. So when you get your psychological level, so we have taken T and P. So these two has been gotten. So you can see that on the third touch of the trend line, there is a very strong psychological level that was respected, which is at 1710 level. Okay, so that very psychological level was respected. So having respected that psychological level, you can see what the market did. The market gives you a kind of hammer hedge at that very level. I don't know, maybe you have some other name that you call it. Those of you that are good in your candlestick patterns and your chart patterns, so you can see what the market gave us at that very place. Okay, so we have dealt with T and P. So what is the next one, which is our I? Remember, we are dealing with TPI, just a three confluence strategy. A three confluence strategy. So I have to go on with the third one, and the third one is what? Our indicator. So I pull out my indicator. Those of you that have been following me, if you know the settings of my indicator, okay, and what is the settings, you go to your F, okay. When you get there, my RSR, there is the settings. You can screenshot it, okay. Period, peso, not much. My moving average, the 5 moving average, exponential close, and 13 moving average. So these are just for those of you that have not see my setups for the indicators. So what is the take on this T or this I? This I is the indicator, and the indicator, the question was when price touched the trend line corresponded with psychological level, what was our indicator doing? If you check very well at this point, you discover what our indicator was doing. So if your answer is oversold, you are correct. So at this level, the indicator was between 15 and 9 level. Okay, and between 15 and 9 level is our oversold level. So when we see our indicator down this value, that means we're expecting for price to rally up a little bit high. Okay, we're expecting price to rally up a little bit high, but we don't know actually how far it will go. But this is our procedure, this is our strategy, this is how we do it. Okay, remember what we're doing is a game of probability. You cannot ascertain exactly how far the price will go. Okay, but you got to, as possible as you can, minimize your losses and maximize your profits. Okay, so that should be your take home on this video. So using the TPI strategy. Now you ask yourself the next question: where do I set my stop loss and where do I set my take profits? Okay, for my stop loss, I think it should be below the psychological level of 1710. So I will probably keep it at 1705. Okay, I might keep it at 1705, which is a 5 point move. So if price makes 5 point move from this psychological level, then I'm going to go out knowing that this setup has been invalidated. So this is the area that most of you are getting it difficult. Most of you don't want to take losses. You just want to be the one in the profiting side. You don't want to make losses. The broker can only make losses, but you're going to be in the profiting side. It doesn't work that way, guys. You just have to have it in mind that the game of trading is a probability. Okay, so when you are going into it, you have to reserve the aspect whereby that losses can come in. Okay, so that is it for our stop loss. So we'll keep it below these levels. If it hits us, then the setup has been invalidated. Okay, so the next question should be, where do I take my profit? Now, there are two things for you to ascertain your take profit. One of the things to ascertain your top take profit is this. So one of the things is this. You check out your nearest swing high. So if we check our nearest swing high, the first one is here, and the second one is here. Okay. So having seen the first leg of this touch of indicator, the second leg. So I choose to stay on the first touch. Okay, so that was the reason why I had to set our take profit at 1737, because I see too well that at this very first touch there was a kind of my will I say disagreement here. So this was a very good obvious high. Okay, so when you are targeting your take profit, you need to consider these factors. So you don't just want to be like, I'm risking 2, so I need to make 4. No, most time the market might get to 2:2 and reverse back. Okay, most times the market might even break 2:4, maybe go to 2:6. So, but what you just have to do is this: you just have to have what you are aiming at in terms of the areas you are aiming at to take your profit, not actually most times how much you make in dollars. Okay, I know that how much you make in dollars should also be a consideration, but at most times when the market doesn't give you how much you make in dollars, you go with the structure of the market. So these are the two ways you set your take profit: the structure of the market and also your risk to reward. So with using the structure of the market, you go on the previous highs, then using the risk to reward ratio, you can go for 1:2, you can go for 1:3, you can go for 1:4. Okay, depending on what you're risking. So at this point, what we are risking from our psychological level of 1710 is 5 points. So if we are calculating what we are making here from this 15 to 20, 5 point, 20 to 25, 10 point, 25 to 30, 15 point, 30 to 40, just count it. Okay, so we're going about 1:4. So do you see that? Okay, okay, 2:4 from 15 to 5 and from 15 to 35. So that is just how to ascertain your take profits, guys. Now, what else do I have to enlighten us on this trade? Now, another thing that occurred on this trade is this, guys. When this market came, most of us hoved in at this very point. Now, the market pushed down, making sure that it tested this trend line before it pushed up again. Now, what is it that you need to understand on this? There's what is called stop hunt. Okay, so I will say that when the market made this rejection here, that it pulled down to this very place. So this was a stop hunt, which if you understand the structure of the market, knowing too well that there is a trend line down here, you shouldn't panic. You should have to hold on until price reverses back again to your direction. Okay, so that is why when you make an entry in the market, you need to give your market a room to breathe in. Okay, so you need to push out your stop loss. So if someone was setting a stop loss at this very point, bear me that the person will be hit out and price will continue. That means you must have missed all this move. So that's why we need to when we make our entries, we'll give our trade a breathing room. Okay, push your stop loss a little below your entry, but not too far from your entry, but at least 180 from your entry. Okay, guys, I don't want to make this video a long one. I just want to explain this to us so that you yourself can be able to get this type of setup and be able to trade perfectly, making profit each and every day. So see you guys in the next video. See you guys in the video. If you like the video, if you benefit from the video, like and comment, drop your questions. I'll follow it up. Okay, see you. Away.